Good evening, guys. Trade with KMD live with you, and this is episode 4 of my XAUUSD chart breakdown. And here with me, we have the trades I took this week. I just finished now. So today is Friday, and by my time it's 6:11 p.m. And so far, so good. We've seen what the gold market did for us this week. It was a wonderful week for some people, and also like a kind of bad week, losing week for some other people. We get. So far, so good. These are the trades I had this week on Monday for my community. Actually, these are the trades I had for my community because I had this. There's a particular buys that I took. There's a particular sale. Sorry, I took from here down, which was 100 pips. I'm going to show you guys the screenshot of this. But there was a. Let me mark it out. There was a sale I took down from this side. So there's a 1 hour zone actually right about this entry here. So this was, I was using my usual 1:2, which is 50 pips to get 100 pips. Okay, I'll show you the screenshot of this. But actually, the setup I sent to my community was this first one and this second one. Now, the reason why I sent two setups to my community today was based on the fact that when I saw the whole market structure and I knew that, yes, gold was kind of showing us different things. The market wants to sell, but buying when we were all expecting sales, that kind of stopping people out and all that. So I just had to play safe for my community so they'll not lose much funds. Even if I know that it's a losing streak for me and I know how to handle it, they might not know how to handle it. So, right, this is our first trade. We had a 1 hour zone that was right here, which when we saw price breaking this 1 hour zone over here, you can see price came to react with a week. And as you saw this pull up, pull down, we knew price was going to break this. Now, we didn't enter immediately off the break. We entered as it broke this 1 hour zone for us to be much more precaution on the market. And this market, it sold all the way down to 70 pips, if I'm not mistaken. This is 76 pips. Because I told my community to sell break even when we are at 70 pips in profit. You definitely see the before and the after of this chart. So this particular first trade for my community was a break even trade, right? And the second trade we had, which was on Tuesday, and this particular trade, I don't know what I'm going to say, but looking at this structure right here, you can see we had a break. There's a 4 hour zone right around this zone here, and we had a break on it around when? In the afternoon time. Now, having this break in the afternoon time, we saw price doing this choppy stuff. Normally, price was meant to come and react on this zone. You can see it's way this week came here around 12 a.m. This week came here around 6 a.m. and this happened here. But based off on the 1 hour, if you go to the 1 hour zone and we check down right here, we'll see that we had something like a zone formed out. You can see this particular zone. So when I saw that price wasn't breaking the zone anymore longer, I had to enter off the sales. I had to enter off the sales for the next neckline break. But I wasn't entering immediately on the next one. I was waiting for a retest to happen. That's why you can see my entry pattern is close to this. Because this right here was kind of confusing, and like I said, the market was showing us sales, was going up buying, and the market, there was a point in time where the market was showing the market wants to buy, and it came down selling. So maybe because of the December, January time of trading, that the whole trading market structure is not really clear based on some news that we hear that investors are just coming in back to the market and stuff like that. You know, we are not the one moving the market, we are the retail traders, right? So maybe we should be expecting good markets February time. We should be expecting very clear market structures. And it's February, third week of February, entering March, May, June, like that. So this particular trade, we hit stop loss. So for my community, this is a -1 and a break even, and those are the only two trades sent to my community. And if we can go to the 4 hours and we can see this right here, we would see that what gold has done something. We can see gold has broken the all-time high. Now let me zoom this in. You can see this 1 day time frame was the previous all-time high. Let me go to the 1 day time frame. So you can see this, right? No particular chart is above it. This was the previous all-time high for gold. And what we can see is that gold has broken the all-time high, and it was broken on Thursday, January 30th. And as this all-time high was broken, you can see all the plays that happened for today, Friday, 31st. Let's go to the 15 minutes. So all these plays that happened from when this all-time high was broken here, this all-time high was broken around Thursday. So the whole of this move from Friday 12th here, up here, has all been from the all-time high. You understand? So trading gold when it's in the all-time high, there are a lot of things we should be considering, which you would now start seeing me using you start seeing me using it in my charts as from next week. The first of it, let me give you guys a clue, is what is psychological levels. So psychological levels in this. So this right here is the psychological levels. I have explained to my community what is and on my YouTube channel what is psychological levels. So these are levels where they're like whole figure levels where we expect price to come up there and bounce. For an example, if we were to look at the reaction that happened at this 215.50 right here, let's look at this reaction that happened here. So we can see this here is a psychological level, and we could see this reaction that happened here. So after this 215, if we should calculate the pips up, I always draw my psychology level in 50 pips. So you can see this is exactly, this 5 is exactly 50 pips. It's because this, you can see there's a space here, that's why it's showing up like this. So this is I apply my psychological levels, 50 pips. And you can see if I was buying this market, let's say if I was buying from here, this right here will be my entry. So anything, wherever I want to be setting my, let's say I was taking this buy, wherever I want to be setting my take profit will be directly on the next psychological level close by. I don't want to be risking up here. Say if I was risking my usual 100 pips, you see, we'll still be in the entry by now, but on the psychological level, and if I'm risking on the psychological level, whatever the psychological level is giving me, I want to make sure it's something that's giving me easy 1:2 or maximum 1:3. So let's say we're risking off 300 pips, 30 pips from here, sorry. So you can see 30 pips off here is giving us 2.61 RR. That's 1:2.61. Because so from next week, you start using this particular chart, conference. You get just a big clue. And this is what I do when I see gold, because there's a period of time when gold broke the all-time highs, and I was using this to mark out possible areas where gold can go there and retest. And if it wants to break or it wants to sell, like now we can see this buy is happening. This buy is pushing up. So let's say this buy is push up and it clears this side. The next place is going into was 2825, followed by 2830, followed by 2835, continuously. Those psychology levels are just giving me tips, head helps where I should be expecting gold to go to those zones and react. You understand? So I think I'm done. I've showed you guys my whole chart I sent for my community this week. So that was like one loss, one break even. So we ended up in loss. Actually, for gold, we ended up in loss in the community. But for me, I wasn't in loss. I had one win early in the morning around 12 a.m. on Monday. So I ended up in, let's just say, I ended up in 2% because that market already gave us 1%. And most times when I see 1%, I always say break even and collect partials. So when I saw the reversal, definitely I'm giving you guys signals. So I know why I would say set break even or secure profits. You understand? So when I saw the reversals, I was able to close out at 1%. So shouldn't be showing this chart lens. So when I saw this reversal quite here, this particular, let me draw this also, okay? So when I saw this move here and this coming down here, when I saw this move, this bearish candlestick forming here, now I knew that this price was going to start going up. Instantly, I was able to close. If you can check from where I'm explaining it from this side down here, you can see that I was able to close up at what? 50 something pips, and that's 1%. So this 2% plus this 1%, personally for me, right, that's 3% minus 1%. So I was up 2% on gold this week. So for that, we are going into what? Plotting our zones for this current new week that's coming. And when plotting our zone, as usual, for now, we are starting from the 1 week zone. And on the 1 week, what can we see here? You can see price has broken this beautifully. You can see price has done this beautifully for us. So what are we expecting? We should be going over to the 1 day to start looking for any zones we want to plot out. Now, right here on the 1 day, there are some zones we'll be plotting out. First one is this right over here. Let me just see. The first one we'll be plotting out is this zone right over here. want to keep this 1 day zone like this. Now we'll not be using mostly the zones down. I want to start plotting out some zones up, right? So we'll go over to the 4 hours. And right here on the 4 hours, you can see we have some zones right here. I'm sure you guys know how I'm plotting these zones. If you know how I'm plotting these zones, you know how I'm expecting something like this now to happen in the market. I'm not saying it to happen. I'm expecting something like this to happen in the market. Tap here and buy your back. You get, so this is like my F and R zone. And after plotting this, okay, let me plot the 1 2 down. Then we'll go over to the 1 hour, because right here we want to respect all the zones we are seeing. No zone is going to be left out. Right here on the 1 hour, we have our zone set. Then we also have our zone again. Now you can see that this 1 hour zone is about to be broken already. So since today is Friday, if we were to be taking buys, it breaks up, just on the see retracement, because everything that goes up will surely come down. You can see this went up, this came down. And I know I've not talked about Fibonacci retracement, but if I was using Fibonacci retracement to trade this, you can see off that week, the market came back to this 50%. So the whole of this percentage like this now, I don't use Fibonacci to trade. I just use it personally on my own. So the whole of this now is like the golden Fibonacci area we should be looking out for, right? So if I was to trade off using the Fibonacci retracement that, oh, this week that came to do this, so I'll just do something like this. These are my entry look like. So I'm risking how many pips? Let's say I'll be ending up risking what? 440 pips. And my target to be to this next week, which is over like 120 pips. Okay, if I was to take this trade off this Fibonacci retracement that happened here, and you can see I'll still be in very massive profits. Should be in over like 80 pips in profits, 60, okay, 70 pips in profits. You can see this, right? But we are not trading off this. We have a exclusive pattern on how we trade gold. So we've plotted out our zones for plotted out all our zones that we want to be watching out for gold. So from next week, okay, I said I'll start plotting out the levels from now. So let me start plotting out these levels. So this right here is the first level that we have, clone. And so on. So I'll keep on plotting up these levels up and up like that. Have a wonderful day, guys. Peace out. Bye.